in this video, I am going to speak a little less about a strategy in and of itself, but a way to lay out your chart so then you can implement a strategy on top of a basic framework. You'll notice that this chart, unlike the other ones in the videos, is a green bar chart on a black background, and that's for illustrative purposes only. You'll see why I do that here in a minute, just because it shows up on the chart a little cleaner, a little easier. One of the things that you need to know about financial markets is that large players tend to operate around large round numbers. So think 100, 200, 300, etc. This is also true in the 50 numbers sometimes. So it might be like 2.50, 3.50, etc. So if you lay out your chart with the large round numbers already marked, a lot of times you can pick up the price action right away. So I have a horizontal line tool, and you can see that I'm going to simply just start laying out round numbers. And in the oil markets, it's priced in dollars, so I'll go ahead and start laying out some round numbers like 60, 55, and 50. Go ahead and do 50, and maybe 45, and so on. So for example, if you were trading the Japanese yen, you might do 100, 105. You can even go as low as 100, 101, 102, 103, etc. Or in the euro, 1.07, 1.08, basically every handle. But the problem that you run into is it comes down to your time frame. In this particular case, I want to keep the number somewhat wide, so you can trade a daily chart if you would like, or even a 4-hour chart. And what you begin to notice is that the markets, and I'll go ahead and zoom out, become a little less random when you start looking at these numbers, because what you'll see is that they do attract a lot of attention. So you can see that, for example, every time we come to one of these numbers, pretty much there is a reaction. You can see that we were falling and we consolidated, and when we broke through and we came back and we found a little bit of support there and there. It's not always perfect, but it gives you an idea of places, if you will. It's almost like signs on a road map. And a lot of this comes down to because of the size of the large players. They can move the market against themselves if they're not careful. So you can see that clearly, paying attention to 40, 45, 50, 55 in this market, and oil has been an interesting place to start looking. You can see that we tried to rally here, we failed. I mean, I can go ahead and mark this chart up several different times beyond what we've seen so far, and it just goes on and on and on. While this doesn't seem, at first blush, a major revelation, if you will, but as I go to a black on white chart here, I'll use candles and I'll move in. Then you can start to see that there were trades. There was a little bit of a hammer here. There was a little bit of a hammer there. You can really start to go back, and you can see that that there are signals out there. There was a perfect shooting star there that would have netted $5 in this contract very quickly. Possibly more, depending on what your entry and exit strategy was. But that's the point. You have to know where to look. And a lot of times, here's a massive engulfing bullish candle, and then we gapped higher. Perfect hammer here at 45. So that's the point. You need to know where to look, and the best traders know that. For them, it's a little less about precise entries and looking for every signal, but looking for the right ones, and these round numbers give you that ability. Now, you could break this down to every dollar, and if you're an intraday trader, then perhaps that would be the route to go. So, for example, you could go to 46, and I'm not going to get too deep into this because you should kind of have an idea now. but you can go into 47 and 48 and 49. So with that being the case, you could go to a shorter time frame, an intraday time frame, and then perhaps at that point in time you can see how that lays out as well. And as you start to draw through these or go through these areas, you can see a hammer there, intraday trade, a hammer there. The problem you get with this, there's a shooting star there, is that you start to run out of as much, you don't have as much real estate. So you do have to be a little quicker, but there's a shooting star. It went right down to the $49 level. Would have been a 1-to-1 or so ratio. There's a shooting star there that actually you would have picked up all $5. And you got to keep in mind, this is oil. This is $5. $5 a barrel is a big deal. That's a decent trade. So you can see the round numbers certainly attract a lot of attention. Now there does come a point where you don't want to clutter the charts up too much, but it comes down to the time frame you're trading. 4-hour charts, you can still do dollars in this particular case, but it gets a little bit more claustrophobic. So keep that in mind. $5, $10 marks react on all time frames typically, or 500 and 1,000 pips if you're in Forex. Then you can go down to the 100 if you're an intraday trader. But if you put this up ahead of time, you'll notice all of these reactions. You can set your system on top of it, and it gives you a nice little roadmap.